All right, let's put up a little risk disclaimer because we don't guarantee anything. Trading is risky. It involves risk. That's why we preach risk management and learning the skill set at ForexNChill. All right, I'm going to pause here a few seconds and turn it over to Miss Chelsea. She's going to welcome everyone, and then we'll get this show on the road.
Good evening, everyone. Thank you so much for being here. So great to see you all. I know it's been about a month since we've done a public session, so it's always great to see some familiar faces that we haven't seen in a while. So thank you so much for being here. We have an amazing session planned for you all this evening. Tonight, Miss Gigi is going to drop her knowledge as she always does. We have the money coach here to talk about risk management, because we all know that here at ForexNChill, that is the #1 thing that we share with our students is proper risk management, trade management, all of those things. And then we have a special guest, Mr. Jay Cross, here to share our upcoming Crisscross EA. Who's excited for the Crisscross EA? Go ahead and drop some fire in the chat if you are excited for this release, because I know it has been a long time coming and everybody's been waiting and waiting and waiting. So we are so excited to be able to share this with you this evening. I am going to go ahead and turn it over to our first presenter, and please understand that tonight is a public session. So if you have friends, family who are interested in trading, who are trading and have not become familiar with ForexNChill, please feel free to invite them. Looking forward to sharing this evening with you all, and we will get started now.
What's up, everybody? This is Gigi, Miss ForexNChill. We're so thankful to have you guys here tonight. So drop in the chat where you guys are tuning in from, logging in from. All right, you guys should be able to see my charts now. So let's see where everybody's from. Oh man. I see Australia, Mexico, and Costa Rica, Hawaii, Minnesota, Atlanta, Fayetteville, North Carolina. Yee yee. It's one of my Lumbee natives. Germantown, Ohio, Maryland, Melbourne, Australia, Miami, New York, Columbia in the house, Alabama, North Cackalack, America, Barbados, Memphis, Trinidad and Tobago, Maryland, Chicago. Y'all keep it coming. Dallas, Oregon, Mexico. What's up, Mexico? Best academy ever. Thank you so much. Vancouver, Canada. Gosh, give me some water. Jamaica. We got some more Canada in the house. Dallas representing Oxford, Ohio. Hey, never been there. And Florida. Welcome, Earl. Thank you so much for being here. So I'm going to minimize this. So a little bit about ForexNChill Academy. A lot of you guys know me. I was over in Afghanistan working, getting shot at, getting bombed, trying to make that money to take care of the family. Got introduced to this phenomenal skill set of Forex. Started studying and trading over there. Was even in the bunker hiding from incoming, moving up my stop losses. And I was like, I got to get out of here. If this thing will give me 6 figures, I'm leaving Afghanistan. I'm going home so I can enjoy my family and enjoy the rest of my time here at home in America. So glad to be back. We started doing Friday night ForexNChill. Then I became an educator on another major platform. And, you know, the team kept saying, you know what, G, we're just here because we want the education from you. We're here because we love the team. So why don't you do your own thing? So that's what we did. We branched off and did our own thing. And we guys brought you ForexNChill Academy. Not going to try to sell you anything, just going to let you guys look at the academy. So if you go to ForexNChillAcademy.com, this is us. It's a little bit about us. It'll tell you about our courses. And this was the phone. You know, I tried to be creative tonight and say, click this phone to join the free Zoom. But it seemed to confuse some people. So we dropped the link and here we are. But this is my baby, ForexNChill Academy. And it's all about learning to trade, guys. There's no marketing, no crazy prices, no having to pay crazy fees to become a part of the platform and all these constant upgrades. You know, our novice program is only $79 a month. You're going to hear from one of our novice educators tonight. The reason we did the novice, you know, we started out, it was just me teaching. And I was like, you know what? When I started to trade Forex, I was taught wrong. All right, I see Ohio and West Palm Beach, New York City, Belize, Connecticut. So is there anybody else here who, when you started to learn to trade, you were taught wrong? People had good intentions, but they just taught you wrong. So you learned the wrong way. Someone said 10 years of being wrong. Guys, I know I was taught wrong like the first 2 years. Now, mind you, again, they had good intentions. They thought they were teaching us correctly. But the more you study and the more you learn, the more you grow, and you start seeing it. It's hard to break bad habits. You know, it takes a long time to unlearn things. Somebody made a comment to me today, one of my private students. They were like, you know what? Once you learn something, nobody can take it from you. And then I thought about that. Well, you know what? That applies to learning wrong. And that's what we're here to do. We're here to take that from you. People have learned wrong, and we're going to take it from you. No more wrong learning, right? We don't want to teach you bad habits. We want to teach you how to trade correctly. And one thing I learned is we were trading market structure. You know, man, I was calling myself the queen of market structure. And I found out there was so much that we just hadn't been taught. So I'm going to begin by showing some stuff about market structure that's being taught the wrong way. And then I learned that after I learned market structure the correct way, I was able to really make money and really understand the market. Then I got introduced to smart money. Well, smart money, market structure still is like that strong foundation because it tells you what the market is doing, whether it's in an uptrend, whether it broke structure and it's going in a downtrend, whether it's consolidating, building up those equal highs that love to entice you, take your money, run the liquidity, and then drop. So market structure tells you what the market is doing. Smart money comes in and gives you that edge to where now you're not going to get suckered in to these equal highs anymore, because now you know it's a buildup of liquidity. And you know that the market makers are sitting there saying, oh, these retail suckers, they're going to sell when it gets here. So I'm going to run this equal highs and I'm going to go up here and I'm going to grab this order block or this imbalance. And I'm going to trick them to start buying because it broke their support or resistance or their supply and their demand. They trick you guys. Trading is such a mind game. So they know that you're being taught to sell from here or to buy every time that price touches the trend line. So what happens? It gets here and it touches your trend line and you buy, but then it breaks, okay? Or even better, people will be buying, okay? Had this beautiful trend line going on, right? You have this beautiful trend line going on. Price comes in and makes a low and does this and breaks your trend line. So once again, you're like, oh, it broke my trend line. It made a lower low. I'm going to start selling. But it didn't break structure because here is your true low. It was just coming down here to grab some liquidity. Okay. So you started chasing the trade because it broke your invisible trend line that the market is never going to see. You're thinking this is a lower low, but it's not. Okay. This is not a lower low. We used to think this was a lower low, this was a lower high, so it was going to start selling because we saw this beautiful engulfing sell candle. Okay. So how many of you were taught that it broke this trend line, it made a lower low, so now it's time to start selling the market? Be honest, I was taught that. What's up, John from Hawaii? Mahalo. I was taught this and I started chasing those sales. Yes, we're going back. This is scar tissue. We're going to remove this scar tissue tonight. We're going to remove the scales from your eyes because a lot of people are still being taught this way. A lot of people are not being taught about the true break of structure. Okay, a true break of structure is here's your impulse. Okay, so your impulse creates a low and a high for that impulsive move. anything that happens between that high and that low, or that A and B, it's a pullback unless this low gets taken out. Okay. It can come all the way back down here to this order block here before going up. When it starts going up, that's when you're now in sync with the trend. But it's not a break of structure for the high until it breaks here. So this zone right here is your true high. And this zone right here is your true low. Everything is, so you hear people talking about minor structure or inside structure. That's what they're talking about. All these zigzags that are confusing the crap out of you. All of this here. Now, when you become a seasoned trader or you're a little more advanced, you're going to learn to take this counter trend trade, okay, that is making a channel or a pullback. And you're going to learn to identify the major components of liquidity that the market is coming back to take. Because when this traded away, it left liquidity here in the form of an order block or imbalance. Okay, so let's just say this is a 4-hour order block and price traded away. Left the wick here. It made this big candle trading away, probably made several candles. Made another candle here. And lo and behold, there's a little wick here. Get rid of some of this stuff over here. And the wicks don't touch. So you'll hear people say a gap or imbalance or inefficiency. What happened is whoever was controlling the market was selling down and sold down aggressively to get a better price on the market so they could trade away. So they've tricked you to sell. They put this big sell candle, but then they break away and they don't want to come all the way back. They have to leave this imbalance, because if they come in and mitigate this trade, excuse me, they're going to allow the people that they tricked to get out of their trades. They have to take money to make money. It's just like any market, stock market, the real estate market. Price has to be manipulated for the big players, for the whales to come in and make money. Okay, is this making sense to anybody so far? Because if you're going to win at this game, you're going to have to think like your opponent. Your opponent is the market maker. When you see a professional fighter getting ready, they study the moves and the strategies and the strengths of the person they're fighting, so they can counter their punches, they can counter their hits. When you see big football teams getting ready for playoffs, they watch the other opponent and learn their playbook. As traders, if we're going to be successful, we have to learn their playbook. One of the biggest things that gets traders in trouble is they try to guess highs and they try to guess lows. You want to increase your win ratio? Wait and let the market tell you what it's doing instead of assuming. We all know what the word assume does. Okay. In case some of y'all aren't country like me, there's a word called assume. And if you break it up and hyphenate it, it makes an ass out of you and me. And we do that a lot of times in the market. Excuse my language. But if we're sitting here trying to control a $7.7 trillion a day market without letting the market makers tell us what they're doing, we're assuming. And we're taking risk that we should not take. So when did my probabilities increase? My probabilities increased when I stopped telling the market to do. Okay, am I having trouble, Chris, or is it somebody in the waiting room?
Someone in the waiting room.
Okay, because I did have to get my internet worked on. All right, so I'm gonna clear some of this off. Well, I'll just go to another chart. So what I started doing, and guys, the team will tell you, I've been calling this gold sell because we have a buildup of liquidity with the equal lows and a weekly order block. So I've been waiting for that. But let me try and find a clean spot here. I have been waiting for the market to tell me what it's going to do. I look for my POIs on my higher time frame, like my monthly, weekly, and daily. That's where I want my structure to line up, and that's where I want my liquidity to line up. I don't trade against the daily unless it's a really good pullback. Like if there's been like a 500 pip drop and I'm expecting like a 300 pip pullback, yes, I'll go for it. But I need to know, where's the market going to pull back to? I'm not just going to buy. I need to know that if this daily has broken structure and it's starting to trade down, where is it headed? So I need to go and I need to find some liquidity. All right. So I need to find my liquidity. Once this daily breaks structure, okay, we're trading up. There's probably like an order block and some imbalance that was left there. It got here, traded up and broke structure. Where is it going? The market makers don't just stop anywhere. They go for liquidity. Liquidity is money. It's like a magnet. If you just imagine that this is a magnet pulling price, that's what liquidity is, because they're looking for the big chunks of money. Order blocks and imbalance are big chunks of money left in the market where they want to close out their positions or override and take someone else's positions. Okay, so what are some forms of liquidity? I hit the wrong thing, excuse me. All right, I'm going to allow everyone to unmute just for a few seconds. Excuse me. All right, and I know some of my students are on here. What are our forms of liquidity that we can look for the market to come to take?
Use your space bar, everyone, to speak, and then when you finish, release your space bar and it'll mute you back, please.
Equal highs, equal lows.
Yes, equal highs and equal lows.
Imbalance.
Yes. Anyone else?
Order block.
Order blocks.
Yep. So we had the equal highs, equal
High
lows,
stops, sell stops.
imbalance. Yes, ma'am. Order blocks, buy and sell stops. What else?
Breaker block, stop losses.
Daily
Yes,
highs, daily lows.
Yep. Daily. If I can spell high and low. Anything else?
Supply zones.
Yes, and you can find order blocks and imbalance inside those supply zones.
Double top and double bottom.
Yes, and that will go in with your equal high and equal low. And so will your triple tops and triple bottoms. Anything else?
Base candle. Base candle.
Yes, a base candle. Supply and demand, people use that term, and it treats and acts just like an order block.
Stop loss.
Yes. Somebody, okay, what else? Now you're getting there.
Equilibrium.
Yes, somebody was on my class. And for those who don't understand it, there's one more thing. Oh, somebody got it. Buy stops and sell stops. There we go. That's your pending orders. I think we got it all.
Fair value gaps.
Yes. I'm gonna go up here with the imbalance. And you might also hear it called inefficiency. All right. So when you find these things, especially on the higher time frame, that's when you get your big moves. This is when you get your big moves. So that's why I had located these on like the daily and the weekly to call this trade. So like the first one I saw was here, was an order block. And what are these right here?
Equal highs.
Yep, it's equal highs. And here's an order block, and it's also what, an all-time high. I'll just put ATH. So it's like a weekly high, daily high, monthly high, because it was an all-time high. So the people who made this big, huge run, they threw a bunch of money in here to buy the market up just so they could short it. But this order, this stack of orders in this order block was captured, okay? They had to hold this position to sell it off. So they wanted to run price up. So, somebody hit the waiting room for me, please. They wanted to run price up. And so they threw a bunch of money, like right here. You see this huge move here? They threw sales in the market to manipulate price so they could come liquidate some other orders, but it also gave them a good price. If you knew that gold was going to go to $2,100, okay, would you rather buy it here at like 1,700 or buy it down here at 1,500? Where are you going to make the most money? And plus, you need to take other people out of the market. So if you look, let me clear this. If you look over here, people were buying, okay? People were buying. So what did they have to do? They had to break that trend line, make it an engulfing candle. Oh, here's two big, huge weekly black candles. You got an engulfing candle. The trend line broke. Man, gold's getting ready to sell. But they knew. They knew they had already priced it. These people already have price points in the market because they have millions and billions of dollars. And so they did a huge run. Okay. So now these orders are trapped. Let's just say they put 20 million to buy it up on that last candle. They're going to come and throw 80 million to sell it off. Okay. They came here. First order of business was to take this last zone that pushed up and broke structure. But they also created liquidity. Okay. So when it came to this order block the first time, it balanced it. Okay. Came to it a third time. This was a New York news session. They came in. What did they do here? Liquidity grab and manipulation to make people think it was going to sell. You had clear equal lows right here. You see how these candles right here. People might not see that as equal lows, but when you see those bodies closing right here together, right here, that's them building up liquidity. What did they do? It bounced, it bounced. So you, as a retail trader, and me, the way we were taught, we're going to buy when it gets here, right? So they psych us out. They do this huge liquidity run, come back up, break structure here. Why is it a break of structure? Because a body of a candle actually closed above. This is not a break of structure. Why? Because the body did not close below. You didn't have a candle close below. Here you have a full body close above. So there's probably something here on the daily or whatever. It comes in, grabs liquidity. Again, they break structure, retest and trade higher to capture the liquidity that was left behind here. But now look at this. You have all this liquidity down here to capture. So this is like a magnet pulling price. Why did it take so long? Because I'll tell people this is going to happen, but it might not happen for weeks or months. Why? Because I'm trading off of a weekly and a daily chart. Am I making entries on the weekly and daily? No. I'm going to my key POIs and making entries on the lower time frame. Here, like right here, after they captured liquidity, they came and closed below this order block. Okay. We talked about equilibrium, which means half. Okay. Equilibrium means half. On this Fibonacci, the pink and the gray distinguish my half. Okay. It closed below half of equilibrium, broke structure on a lower time frame. Those people who train with me one-on-one, they'll tell you, I can look at this and tell you what the lower time frame did. You had to break a structure and retest on the lower time frame. Okay. Because it broke on the lower time frame and did a retest. Then it took out this order block. That order block became a breaker block and it traded lower. Once you get a higher time frame break, you go to the next higher time frame POI. Okay, the market doesn't trade in random places. Because all this making sense to everybody. And I'm sorry, the reason it looks so small is because I'm on my big computer tonight, so it probably looks small. Which area did you want me to zoom in on? And I'll go back over that for you. Yeah, you can also like take your finger and zoom in on those spots. So I'm good now. Okay. So what I like to teach people to do is pay attention to higher time frame structure. Unless you're a sniper and you're going for those 10 and 20 entries, even then, if you don't know what the higher time frame is doing, you're going to get burned. Okay. There were when we first started learning about smart money, there were these people used to bump their gums and talk trash because we were still trading market structure. But I would see them come here and trade all week to catch little 20 pips, 20 pips, 20 pips. And it would take them 2 or 3 tries just to get that refinement down to that 1 minute entry or whatever. And at the end of the week, they had taken about 20 trades to get 100, 200 pips. And I had taken 1 trade to get 500. You really think I'm sweating the small stuff like that, guys? I'm not going to sit here and work all week. I mean, I can take 1 trade and produce the same results that you're doing, like catching 2, 3, 4, 5 trades a day. Now, if that's your trading style and that's your personality, that's what you should stick to. But the way I teach everyone, you need to trade what makes money for you, what makes sense for you. Okay. If you're coming over here and you're trying to trade from a daily order block to a daily order block. Okay. And on the lower time frame, you got your little 4-hour, 1-hour zones. Okay. You just need to know where you are on the higher time frame. It's okay to come down here and look at these 4-hour and 1-hour POIs. In fact, I get a lot of entries off of those 4-hour and 1-hour POIs myself. But because I know where the daily is going up here, I'm not sitting here when the market comes on the 15-minute and breaks structure and thinking now the market is in a downtrend. I'm understanding that the 15-minute broke structure because it needs to come back to my 4-hour. I had a chart with a good display. I don't know where it is, but I'll do it again. So let's just say this is our daily. Our daily is making higher highs and higher lows. Okay. And after I do this, I'm gonna let Justin tell you guys about Crisscross, and then Money Coach is gonna come up, okay? So let's do this, and I'm gonna change my color. Okay. So as long as my daily is buying up, guess what my 4-hour, 1-hour, 15 minutes doing? It's buying up too. But when that daily needs to make a flag, what do my lower time frames have to do? When it's time, when it's time for this daily to come down here and capture that liquidity for that continuation, that 4-hour is going to break structure to come here. So now people who don't know where they are in the market, they're thinking the market is on a downtrend. So they start chasing sells. They failed to do their higher time frame analysis and recognize that the daily just needs a correction. Okay. So let's see if we can make one more layer to this. Okay. Let's get us a green one going on here. Okay. So let's just say this is like your 15-minute and 5-minute. And the reason I left the 4-hour up, because it'll take like 6 4-hour candles to make that daily candle, because there's 24 hours in a day, 4 and a 24/6. Okay. All right, so now, but now like your 15-minute and 5-minute is coming up buying. I might have got too close. Let me do this. Let me back it out a little bit. Okay, now and this is all happening simultaneously. While the 4-hour is just straight buying up, these lower time frames are doing this. Now it's selling along with the 4-hour and the daily. But then it has to start buying to go with the 4-hour. Then it has to start selling again. And see how confusing this can get? But here's the beauty of it. If you know where that higher time frame liquidity is, and bam, boom, that's going to be your next move. Now you're going to come in here. You're going to be able to go on your 5 or 15-minute, and some of you, maybe even your 1 minute. Oh, it's going to hide it from me because I'm on a higher time frame. So let's just do it like this. There we go. You're going to be able to come here on your lower time frame. I was working with the student one-on-one today and showed this to him to where you can refine this stuff. And instead of getting like a 30, 40, or 50 pip stop loss, you can come in and get those 5 and 10 pip stop losses, minimal drawdown. Okay. So it's okay to trade the lower time frames if you understand what your higher time frames are doing. Okay. Because the way I explain it to people, when you're driving over the higher time frames, it's like those corn mazes you see at Halloween, where if you drive over it, you see everything. You see everything. But then when you come down to your lower time frames, you don't see any of that. You don't see any of it. So now you don't know your entries and your exits. You're lost. You're wandering around in here and you don't know how to get in or out of these trades because you don't have that aerial view. You don't know, your boots on ground and you see everything. When the military gets ready to conduct something, they first do surveillance from above. So when they get boots on ground, they will know what their obstacles are. Whenever you're trading the higher time frame, you are looking at an aerial view. You're doing your surveillance so you don't get trapped at these equal highs, these equal lows. When the lower time frame starts selling, you don't get stuck and start buying because you don't know that there's been a break of structure on the higher time frame or there's liquidity to be grabbed. So even if you are a scalper, getting your 20 pips a day and getting out, be aware of your surroundings. So when you get boots on grounds, get those sniper entries to get those small trades, you don't get lost. You don't get your stop losses hit. You don't get sucked into liquidity. You don't get trapped in the market and get your accounts blown. All right. Anybody got any questions about any of this? Oh, let me make it where you guys can unmute. All right. Does anybody have any questions about anything we covered so far? And this is why, if you follow my Telegram, you will see for the last few weeks, I've been like, gold is going to sell, oil's going to sell, because I was looking at the higher time frame, just like GJ last year. And I always use this example because I sat back for weeks and watched everybody trying to sell GJ. And I was telling my team that it was going to take this monthly order block out and trade higher. Anybody on the team, anybody that was following me back then, remember that? I kept telling y'all, because this order block had already been mitigated, and because here you had a failed rally to the downside, and how it was accumulating and making higher lows on the lower time frame, this was going to be breached. Everybody was thinking that this, and it's a sell pattern, that it was going to hold, but I was calling it to be breached. Okay. So that's it from me. If you guys have any questions, we can come back later. But right now, I'm going to turn it over to Justin. How many of you are excited for the Crisscross Auto Trader that he's been crushing FTMO with? Anybody? Y'all want to see what he's been doing and how he's been making those crazy moves? Automated.
Yes, I'm ready.
30% in a day. All right, with automation. So Mr. Crisscross, J Cross, where you at?
Right here, right here. Can you hear me?
Yes, sir.
All right, perfect. I'm going to share my screen, but if you don't mind, can you make me a co-host?
All right, you're good to go.
All right, let's see, share. First, I'm going to show you my FTMO screen. I will explain to you why in a second after I show it to you. All right, so I know I was using the Crisscross EA, and I will go over that after I kind of show you how to do my analysis. But as you can see, the red is losses. I had 2 losses. All this is on June the 13th. All the greens is profit. If you look at it, that's actually 32,000 bucks. So, and this is on a $200,000 account. So 10% of 200 grand is 20 grand. Needs to say I made more than 10% within a day, actually within a few hours, give or take. And this was mainly on Japan pairs, right? So y'all can see my trading view, correct?
Yes.
All right, perfect. So going back to it, so where this trades happened was roughly on June 13th FTMO time. So which was late on 12 June. What I was looking at was, as you can see, as when I was talking about in the break of structure, price started coming down, it came back up, retested, and it continued coming down. I marked my charts up on a daily on a bigger time frame. So when I was patient, I went ahead and marked, I waited for the next break of structure, went ahead and marked the nice sell flag that came and pulse correction continuation. But I went ahead and had it marked and went ahead and apply the rules that is within the CC Crisscross EA, which is pretty much based upon what I teach every Monday night. But I had it set and went ahead and went to bed and let the trades happen. I woke up and I was 32,000 in profit. So that's one thing I cannot complain about. And this is just one Japan pair. Other Japan pairs pretty much played out the same. Just doing basic analysis, using a particular time frame, letting it meet my confirmations, and went ahead and took the trade. And we'll go back to FTMO for 1 second. And as you can see, I pretty much was collecting at least 50 pips per trade, and I was risking just 10 pips. So that's what, 1 to 5 ratio per trade. So I'll go ahead and show. Let's see. I'll stop sharing my screen for a second so I can show you the EA. Reshare.
Okay, while you're pulling that up, I'm going to answer a question that I didn't see. Someone named Jay asked if there's like a hierarchy in liquidity, and my answer was the major hierarchy in liquidity are your higher time frame zones. However, there are high probability order blocks that do have a stronger draw on liquidity. And it also depends where you are in the market and what time of day it is. All right, now I can expand on that later. There you go, Justin.
All right, thank you much. Let's see. And by the way, just to kind of go back, I was kind of looking at the chat I was just talking. Again, I was 32,000 in 1 day. That was not my only day trading. Let's see, I made what, 50% return on investment that week. Gwen, do you remember? I want to say I got up to 65K within that week.
Yeah, and y'all, he got up to like 65K, but like there were a few times I was like, close the trades out, and he didn't, or he would have made like 75K.
And then the following week is another 60 some. So I was say 100 some thousand within 2 weeks. And I was using a Crisscross EA alone, not manual trades and nothing like that. I personally used to have issues either missing my entries or scared to hit the button for entries because like my emotions get to me. And I'm blessed to be using this Crisscross. I mean, it's something I learned from Gwen back 2 years ago. I mean, trading for 3 years. And this has been a huge game changer. Active duty military, and I don't have time to sit behind a computer 24 hours a day. Now, literally just take and do my analysis, drop it, and then just go ahead and go about my business. And if there's nothing that catch my eye, go ahead and turn it off for the day. So that was my biggest thing, was miss my entries. And before Crisscross, sometimes I catch another good entry. A lot of times I catch myself trying to chase the market instead of actually being in profit. And of course, just like everybody else, even going to casino gambling, you start losing money. What do? You go ahead and give the machine more money, trying to catch up what you lost. So again, this has been a huge lifesaver. Kind of going over to EA, not going bit by bit, but some of the big things. There's 3 different time ranges on here that you can actually place, or you can have them leave them turned off.
Hey, are you going to share the EA screen, or are you just going to explain it?
I thought I had it turned on where you can see it.
And you
My
have
bad.
to do no share.
Screen is paused. Resume share. Okay, can you see it?
Yes, sir.
Thank you much. But the EA, one, you can go ahead and choose your risk percent. I like personally using it, leaving it at 0.5 or 0.6%. You can have it set to take total of 15 trades, 4 trades. It's up to you. Your time frame, you can have it set for whatever. All of these settings that you see right here is just demo settings. It's not actually what I use. Let's see what else. I mean, once it actually gets released, I can go more in detail what the actual setup looks like. But
Hey,
you can,
Justin, is there any way you can just like hit your Zoom button? It's small on my big screen, and a few people are having trouble. So basically, he's showing the inputs where he's deciding what time of day he wants it to run, what lot size he wants it to be. So what we do, again, we're big on risk management, and Money Coach is going to go into that. We're going to talk about how there's people who are winning less than 50% of their trades, but they're making 5 figures. I'm sorry, 6 figures a month on FTMO, people with like 40% win ratio, because guys, it's all about risk management. As you see, Justin was only risking like 0.6% a trade. Chelsea risked like 0.75%. And that's how, and you still get the big days without risking blowing your account. But there you go. He's got it blown up for you now.
I had to move it to my other screen. Let's see. Like I said, here's the risk percent. There's 3 different time filters, which is a huge plays a huge role, because there's multiple sessions within the Forex market. There's London session, New York session. Price likes to consolidate. Price likes to try to do fake out moves. So this is a huge factor. There's also where you can have it set to turn off and turn back on whenever news events happens. For example, President Biden comes on air and starts to speak, talking about inflation rates, interest rates, or whatever. You can have it set to go ahead and turn off until 30 minutes before, 30 minutes after, or 15 minutes, whatever you prefer, which is right here. And the reason why that's important is market likes to go haywire during that time. It likes to try to activate people's buy and sell limits. It likes to activate people's buy and sell stops, pending orders, etc. So again, this is a huge portion. Also within this one, not only will it give you an alert notification, like, buy signal, sell signals happen, but you can actually do a manual buy or sell trade as well. So instead of just letting the Crisscross do its thing, you happen to be by the computer, you notice that the signal comes up, or be on your phone and the signal pops up, you can still put an entry in if you wanted to. I've tested it and it works perfect. Let's see. There's a lot of things that's been added within the new Crisscross EA that personally I enjoy. And like I said, I mean, a lot of these settings is not what I use, but I'll go more in detail again after it's released. One, Thank you. One part here is, so daily profit met, I'll leave mine set at 15% for the day. What happens, what that means is once you make 15% return on investment, it will go ahead and close out all your trades. Right. At the same time, I leave the daily loss met to either 3% or 3.5%, depending. What that means is, let's say you go on a drawdown of 3% of your balance. It will go ahead and close out. So I mean, that again, that plays a huge role. And this segment right here, what this states is, so at a certain time of the day, like let's say during the New York session, at a certain time, price likes to reverse, consolidate, or starts to reverse. And like myself, I'm doing at work. I'm tied up doing some classified stuff at work. I don't have time to try to go out on my phone and try to close the trades. And so pretty much what this does, it will go ahead and kill all the trades at a particular time, whatever time you have set. Instead of being a profit, I don't know, 10,000 bucks. And then once you ever check your phone at lunchtime, you're down, it went from 10,000 to 400 bucks. You literally just gave back 8,600 bucks. So again, this can play a huge role. A lot of thought has been put into this process. This has been worked on for, I want to say at least over a year.
Yes. So I'm gonna answer a few questions I'm seeing in the chat. Somebody said, is it available this weekend? It's actually available now. I just have people on the team testing it, because from experience, when we released the trade assistant to a lot of people, it caused a lot of frustration and heartburn, because a lot of people didn't take the time to learn about VPSs and EAs and MT4 and MT5. So if you guys plan on using automation, you need to start watching training videos now, because, you know, we will tell you how to use Crisscross to the best of its ability, but we're not going to teach you how to use MT4. We're not going to teach you how to use MT5. We're not going to teach you how to set up a VPS. That's between you and your VPS. Because like I said, the last experience was sort of like a nightmare. Somebody's asking about the presets. Okay, when we had it released to the whole team, we let everybody play around with all the settings and do savvy and do what they wanted to try and come up with a set that works. A few people, you know, it's like a shiny new toy. Few people played with it a few weeks, got frustrated, left it alone. A few people were like, look, I need automation in my life, and they buckled down and they came up with sets that work. So some of the settings we have locked to where you cannot change. So you will be getting just in settings, and you would change stuff like your risk management, blah, 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 things like that, trailing stop loss, turning the news on and off. Now with Justin Set requires that you get on his Monday night sessions and learn the crisscross strategy, because the reason he's having huge returns is because he's actually marking up his charts and saying, well, look, I expect EJ to buy tonight, so I'm going to put EJ on for buy only, because there's a buy only, sell only option. Maybe he's expecting CAD JPY to sell. He'll put that on sell only. He's expecting all USD to buy. He'll put that on buy only. Jazz is set. Jazz wants to be 100% hands-free. So Jazz is having 2, 3, 7% days with her hands-free. And she's looked at exactly what time of day to turn it on and to turn it off. She's figured out how many minutes before news and after news that it should turn itself on and off. Okay. She has, what else has she done, Justin? She's made hers like completely hands-free. So what I'm doing now is I'm trying to work on a hybrid that is like half Justin and half Jazz. That like if you took his trades and you were off with your analysis, that you would have a less chance of losing the trades. So his are going to be more for people who like to mark up your charts and get the big moves. She has her set for scalping, and I'm going to try to do like a hybrid intermediate. It's going to be for sale on the ForexNChill Academy. So you don't have to be in our classes, like in my classes or whatever. You can get the EA by itself. Okay. And you'll be getting a license for it to use it. Just like with the trade assistant, it was opened up to the public. There are people passing FTMO with the trade assistant. So for those of you who aren't familiar with what the trade assistant is, it's built on risk management and trade management. So like if you wanted to take your own trades, but you don't know how to calculate your lot size, it calculates it for you. It'll do trailing stops, take partials, and you can also connect it to Telegram to copy and trade signals, fully automated. So we're, again, y'all see we're big on risk management, and you're going to hear Money Coach talk about that and talk about the guy who just made like $600 and some $1,000 in 1 month on FTMO. His payout was like close to $600,000. And he's using indicators. He's not using anything advanced, but he's using proper risk management and trade management. And that's what all of this is built upon. So today, I saw something posted and I went and verified it. Top tier is allowing any EAs at this time. You have to subscribe to their super, what is it called? I posted it today to the team, but it's not like their regular challenge. It's like they give you a higher leverage. Yes, they announced it, and I even got, I contacted them and they confirmed it. Let me look at my screen and I'm gonna read you what they said, because I went and looked at it today, because I don't work off rumors. And if I'm gonna bring it back to my team, you can guarantee that I went and figured it out myself. Okay, hold on 1 second. They said you will have to purchase the Plus Challenge, which has lower profit targets, which means you don't have to make as much money. You can use EAs and copy trading. It says EAs and copy trading are allowed. So you can use the trade assistant and use the team signals, higher leverage and bigger challenge sizes. So it starts at 25,000 for $250, and it goes up to a $300,000 account. Okay. So guys, I'm telling you, we have people just using the $49 a month signals and the TA and getting funded. Kevin's already got like 2 or 3 funded accounts just from using the signals. People work, people go to school, people are in the military. They don't have time to do all this trading on their own. So that's it for the automation. Anybody got any questions before we turn it over to Money Coach? Jay, I am going to try to get Crisscross and the Hedgehog uploaded. The $49 a month is just signals only, but they're really good signals. The Hedgehog,
Yeah, how's
it's like 60-some thousand right now.
okay? I was just about to ask how was that 50,000 account? Okay.
No, it started with 10,000. But I've been trading it aggressively.
Hi, good night.
And so I don't advise trading it aggressively. I traded it aggressive to test it this week. We advise people, yeah, Savvy, the new Hedgehog settings are the bomb. So let me share like a whiteboard. So a lot of you've seen a hedger floating around out there, and like somebody from another academy contacted me today, and she told me she had a hedger, but she didn't know how to run it and she wasn't having success with it. So I said, show me your settings. And she sent me a screenshot of her settings. And it's almost identical to what we have, but we had ours upgraded and supercharged. And I told her, I said, you know, what you're using is basically what I'm using, but I had a lot of tweaks and upgrades done to mine. And I told her, you have to use it in a consolidating market. You have to avoid breakouts. Okay. If it breaks out, turn on the buy only option. So we only trade it during certain hours. We avoid all news. We get our money and we get out. I took 30K to close to 100K. And then when the Russia thing happened, a lot of people got in that crazy drawdown and we didn't have safety nets. And some people closed out, kept their money. Some people were like, they didn't know what to expect. Russia had never attacked Ukraine before and it blew some accounts. Let's be honest. Some people made a lot of money and got out. Some people held it because they weren't practicing proper risk management, were afraid. So by the time gold came back down, it was too late. So now the hedger can be used on top tier because I asked them. So if it's trading sideways, it makes a lot of money. When it breaks out, you need to take that small loss and wait till it starts consolidating again. So what we did is we have where you can draw a range on there, and if it breaks out, it will shut down all your trades. There's a news filter, so it will shut you down before news. One thing I've learned about gold, if it's going to have news this morning, like the night before, you need to turn it off super early because it starts consolidating in little tiny spots and it doesn't close out your buys or your sells. And then when it breaks out with the news, you get caught up. Now, the other day I let it run on news on purpose. And when I did, and it did that crazy wick, it was here and wicked up and then came back. It made me like $10,000 really, really fast. And so it's doing well, but I think the safety features are going to save a lot of accounts. It is up to $61,000. All right. So that's it for the Hedgehog. Anybody else before Money Coach comes and talks to us about whatever he's got to talk to us about tonight?
Hi, good night.
Crisscross and the Hedgehog be released at the same time or separate dates?
So Crisscross and Hedgehog can be used at the same time, but the thing is, with a hedger, you don't want to over leverage. So you don't want to, we use really small lot sizes on it, and you don't want to, I wouldn't use them at the exact same hours. I've used them both on the same account, but what I did is like I was trading NAS like from 6 o'clock at night to 10 o'clock at night and turning it off, and then turning on my Crisscross, which you can set the hours on them. They'll turn themselves on and off. The beautiful thing about Hedgehog and Crisscross is once you set your hours, you do whatever. Chelsea will tell you, like, we'll go to bed and just wake up with money. Because it turns itself on and off. We highly suggest that you have a VPS, because if you don't have a VPS and your computer or your internet goes down, you're screwed, because now you got all those trades running and nobody managing it. So MT4 and MT5, yes, you have to have that. $99 is going to be the price. $99 a month, because I compared it to what's out there and it's performing better than what's out there. And we priced it cheaper than what's out there. And plus ours is going to come with education and the presets already in there. So you guys won't have like that learning curve where you have to figure out what works for it and what doesn't. And because when we first got them, we had to figure out, you know, what days should I run it? What pair should I run it on? What time frame? So we've done all the hard work. We've done the grunge work. Your Crisscross is for a trending market, and Hedgehog is for consolidation. A hedgehog means it's taking buys and sells. That's why the beauty is in the consolidation. Crisscross is a strategy where, you know, we caught 200, 300, 400 pip moves. Like I said, top tier said you can do copy trading and all EAs are allowed. So FTMO, everybody's going to be doing if you use the Crisscross on that, people are going to choose different pairs. You choose the pairs that you want on Crisscross. So no, everybody won't have the same trades. And then some people might have 1% risk. Somebody might decide they want a 15 pip stop loss. Some might decide they're using 10 pip. There's going to be variations in the Crisscross. Nobody's going to be taking the exact same trades. No, we've been using FTMO. We haven't tried MFF. If they have a demo account, we'll try it. I've had indices sets for Crisscross, but since I got this new one, I haven't made an indices set. I haven't had time to work on anything because I've been coding 3 different EAs and got more that I'm working on. So I've had the team working on Crisscross and the Hedgehog, some people on the team, so we could work out kinks before releasing it to the masses. That way people would have experience with it. We don't want to just release it and nobody's ever ran it. That's why with Crisscross, we just let the team use it for the last year. But since we became an academy, we decided we were going to release it to the public. Actually, Jazz has a set she's working on that she said was working good on gold. Again, I've had good luck with US 30 on it on the back on in the past, but I haven't tried it with the new filters and the new settings that we have. Since everybody tried it, we have had upgrades made to it. Probably by Sunday, it should be ready. I could release it now, but I'm having to be a coder, an educator, and run the academy. So I'm just a little stretched thin, and I'm learning. Like I said, guys, learn about EAs, learn about VPS, learn about MT4 and MT5. So we want to get back to the education because we're big on education. Money Coach, you can start sharing your screen if you want. We're big on education, but I've also found out the more you know about trading, the better you're going to do with EAs. Okay. Yes, they're all made for MT5. I only use MT5. We have for MT4 and MT5, but it performs better on MT5 because of the time frames that are allowed on MT5. And there are some good brokers out there with the MT5. All right, Money Coach, you there? Did we lose him? Yeah, I see you. You got to unmute, Money Coach. We want to get back to the education.
Yo. Can you hear me very good? I need everybody to drop in the chat the letters F, X, N, C, A, F, X, N like Nancy, C, A, F, X, N, C, A. Drop it, flood it, drop it, flood it, drop it. F, X, N, C, A, ForexNChill Academy. If you are not connected, you ain't connected. It is what it is. Shout out to G. I mean, just an amazing friend. I've been knowing her, following her forever and a day. And I'm telling you, this has always been her. She's always been about helping people. And what she has done within this short amount of time, this is a startup. This hasn't even been released. First of all, the Academy hasn't even been publicized or promoted to the general public. So whoever got you here, you are very well connected because you guys are inside on the very, very, very startup. This is beautiful what she's doing. I mean, breaking ground, groundbreaking technology. The stuff you're seeing, the results you're seeing are phenomenal. But let's go deeper. She not only wants you to make it to where, you know, hey, for some people, they need that automation. They need that because of extenuating circumstances. But what we do talk about, we really, really focus on the education. This is why this is an academy, all right? This is an academy. This is where we teach. We teach people to be able to be their own signal callers. I am the signal. That is the slogan. That is the theme of the academy. I am the signal. And that is what we here at the academy are very, very big on. We're very, very big on that. All right.
I'm sorry, I accidentally muted you, Money Coach, because I was muting everybody else. Go right ahead.
No
Unmute
worries.
yourself.
No worries. We strive to be the signal. All right. And when you get to that point to where you are going to be your own signal, you don't need EAs. All right. Because computers crash. All right. Cell phones crash. All right. Technology crashes. And when you need to go back and say, hey, I need to be able to do this on my own, then we need to be able to do this on our own. All right. And I'm just going to be brief, not going to be long. All right. But I'm going to get through this. All right. And I know that you all are watching the chat. I'm going to share my screen. All right. Okay. Let's do this. Share. All right. You guys see my screen? All right.
Yes, sir.
Very, 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 very good. We are talking about risk management. All right. The definition of risk management is risking a certain predetermined percentage of your overall current balance. Now, let me just say this. It is understood. This, and I'm going to type this in all caps, and I want you guys to understand this. As a trader, it is inevitable, and I know I have some, that you will take losses. It is inevitable, all right? You are going to take losses, all right? You're going to take L's. In the chat, I need everybody to put L's. Put L's in the chat, because you're going to take them. You're going to take them. You're going to take them. You're going to take L's. You're going to lose. You're going to lose. Now, this is why the money coach here is here to help make your day. How can I take losses but still be profitable? How can I take losses and still be in the positive, be in the blue at the end of the week? How can I take losses and still pass FTMO, pass top tier, pass whatever you want, whatever prop firm you want to pass? Risk management, ladies and gentlemen. Risk management. Risk management. All right. Now, this is what you have to do. You have to be able to understand whatever your current balance is. And let's just say for tonight's demonstration, we have a $200 balance. A lot of people get, caught up in the $1,000 account, the $100,000 account, this, that, and the other. It's all about percentages, ladies and gentlemen. 10% on a $200 account is the same as it relates in a percentage wise as 10% on a $10,000 account. If I have a $10,000 account, all right, ladies and gentlemen, if I have a $10,000 account, okay, and I get 10%, I just made $1,000, okay? If I have a $200 account and I make 10%, I only made $20. Now, my question is this: who made the most percentage? Who made the most percentage? Did the $10,000 account make the most percentage, or did the $200 account make the most percentage? Let me see what you're putting in the chat. All right. What are they saying in the chat, G? Because I can't put it on my screen or else you'll see a black one.
They're getting it right. They're getting it right. They said they're both the same.
They're both the same. Okay. I need you to say what you just said again, Mama G. What are they both?
They're both the same.
They're both the same. Okay. If you can make 10% on a $200 account, you can make 10% on a $10,000 account. Why? Because of risk management. So if I can get 10% on a $200 account, I can get 10% on a $500 account. I can get 10% on a $30 account. I can make 10% on a $10,000 account. I can be like Just and make 10% on a $200,000 account. It's all about risk management. All right. If you understand that with risk management, I'm going to risk 1%. 1% of $200 is $2. If I lose $2 on a trade, am I going to lose sleep? Are you going to lose sleep? If you had a $200 account and you lost $2, would you lose sleep over $2? Would you lose sleep over that? Would it just mess your whole day up? If you had $10,000 and you lost 1%, 1% of 10,000 is $100. If I lost $100 and I had $9,900 left, I am not losing any sleep. Do you understand that? Now, if I risk 0.5%, which would be $50. If I lost $50 on a $10,000 account. I am not pissed. I'm not mad at all because I am practicing. Put it in the chat, RM, put it in the chat, capital RM, put it in the chat, RM, risk management. This is what a lot of people are missing. This is what a lot of people are missing. It's 134 of you on here. I'm telling you 135, just jumped in 135. I'm telling you, you missing risk management. You are missing it. And the people that's not typing it, you the ones missing it the most. Risk management is what you need. You need to be able to do it by yourself. How do I calculate it on my own? It just takes a calculator and a little thought. Let's go through this and I'm gonna bid you all a farewell. We're gonna get out of here. Let's just say we have a current balance of $200, all right? And 1% of a current balance would be $2, all right? That's what 1% would be. 1% of $200 is $2. I would divide $2, all right, by 30. Let's just say we have a trade and the trade is for 30 pips, all right? So I would take my calculator, all right? I would say 30 divided by $2, all right? Actually, I would do it backwards. I would be $2 divided by 30 would be 0.06, all right? You see that? 0.06, all right? If I take that 0.06 and it's actually 0.0, as you saw, 0.066. So let's just say for this demonstration, this would be 0.066. We will take it to 2 decimal places over. All right. It will be 0.06. All right. Now, let's see, move the decimal place to the left by 1. All right. So if we move the decimal place by 1, it will be actually 0.06. That's what you would see. All right. You would see this. If you move the decimal to the left, you would see 0.006. That's what this is, 0.006. Okay. Again, if you take $2 divided by 30 equals, move the decimal place to the left, you would see 0.006. All right. Now, we know as traders, the lowest lot size that you can have is a 0.01. So we know automatically that would be our lot size. This is how I know what my lot size would be in order, because if this trade hit this stop loss, 30 pips, I would, if I put 0.01, I would technically lose right about $2. I would have $198 and I would not be mad at all. Do you understand that? Now, again, this week's imaginary account starts with $200. Lot size is 0.01, which means you risk 1 penny per point. It takes 10 points to equal a pip. You've heard about pips, all right? Okay. Lot size of 0.01 equals a dime per pip, okay? Now, on this particular deal, all right, okay? This particular deal.
Hey, I want to stop you for 1 second.
Gotcha.
Before y'all lose attention, I'm going to tell you now, we were all marking up charts. All of our charts were playing out, but nobody started getting funded until we did this training. When we did this training, people started getting funded left and right. So that's how important risk management is. People started getting funded and they were only winning 50% of their trades. So if you pay attention to anything, pay attention to risk management. This is when the FTMO certificates started flying on the wall. So I just wanted to reiterate how important this is.
All right, excellent point. Now, we have 24 trades, all right? I'm gonna go through these very fast, all right? And I'm gonna go through the mechanics of it. This is what risk management looks like, all right? With 24 trades, we won 17, lost 7. That's a 70% win ratio, all right? We're only going to risk 1% just for this demonstration, 1%, all right? On this particular trade, the stop loss was given was 30 pips. All right. And we started with $200. All right. Okay. So if we have $200, we know 1% is $2. All right. $2 divided by 30, which that's the stop loss here. All right. I move the decimal place to the left. I have 0.006. I know that this is not a 1, so my lot size is going to be 0.01. All right. On this particular demonstration, we made 32 pips. All right. So with 32 pips, that would be 320 points. All right. So all we do is whatever your TP is, if that's 32, you add a 0, you multiply that by your lot size, 0.01. All right. Okay. Let me do that again. Let me see. What did I say? 320 times 0.01 equals, there it is, $3.20. Okay. So whatever your TP is, you just add a 0. All right. That's all I'm going to do. And I'm going to multiply it by our lot size. Very easy. Okay. Here the TP was 32. It would be 320 because 320 points equals 32 pips. All right. 170 points equals 17 pips. All right. Here, 130 points equals 13 pips. That's what I'm talking about. All right. You just pay attention. So we made profit. We made $3.20 profit. All right. So our balance now is $203.20. All right. Now, your most funded accounts say you have to get 10%. So 10% on a $200 account means we are trying to get at least up to $220. That's all we're looking for, $220. When we crack $220 on this particular account, we will have passed a prop firm's funded account. All right, just the certification. All right. And then you have to go through the verification and things of that nature. But we're trying to get 10%. All right. Next one. If I take $203, so I know 1% of $203 is $2.03. All right. So $2.03 divided by the stop loss, which is 30, equals 0.006. Move the decimal place over to the left one time. I still have 0.00. Lowest lot size is 0.01. All right. We won this particular account trade. 170 points equals 17 pips. 170 times 0.01 means we made profit $1.70. We are up to $204.90. All right. All right. On this particular trade, we lost. Okay. But we know what we were risking. We were only risking 1%. So out of $204.90, I lost $2.04. Am I losing my mind? Am I losing any sleep? No, no problem. I subtract $2.04 from $204.90. I made $202.86. Let's keep moving. 1% of this is $2.02. I divide it by 31. All right. Once I do all of that, $2.03 just for demonstration. And at some point, I'll just get you guys to take my word for it. But for the first ones, we'll just go through it. 31. Look at this. 0.06. Move the decimal place to the left. 0.006. 0.01 is the lowest. No problem. We're going to do this. 130 points times this is $1.30. I am back up to $204.16. So this 204 that we lost, we're about to make that back. All right. We're very, very close. All right. We took another loss. No problem. I lost $2.04. I'm down to $202.12. All right. On this particular trade, all right, we're talking about exotics. And on some brokers, this is where you can make 1,866 pips. Now, $202, let's do the math. All right, 1% is 2.02, all right, divided by stop loss, 298. See, somebody got real scared because they saw, whoa, 298 equals All right, we know this is 0.01, but look what happened. We won. All right, clear. So 1866. All right, so 1866, add a 0. All right, times 0.01 equals $186.60. Our new total balance is $390.76. All right, ladies and gentlemen, we could just close shop right here because 10% was $220. Just by using risk management, my lot size never went over 0.01. We have made $390.70. We have gone over and above $190.76. Now, put in the chat, it doesn't take much to make more. It doesn't take much to make more. You guys are thinking, I need a big account, I need this, that, and the other. We are practicing disciplined risk management. But let's just, for demonstration, keep continuing. 1%, if we'd have done 1% on this particular trade, we still are using a 0.01 lot size. We would have made $4, $394.76. All right, next trade, we would have made $4.50. Look at these little $4.50. A lot of people are looking at, oh, he made 64,000. Oh, he made this, that, and the other. If you can do it on a small account, you can do it on a big account. All right, we're up to $399.26. We won the next one. We made $5. We're up to $404.26. We won the next one. We made $20. There's your 10% in one trade. We made $20 on a euro odd, $424.26. The next trade we made $450. We up to $428.76. The next trade we made $2. We're up to $430.76. The next trade we made $4. We're up to $434.76. The next trade we made $2. We're up to $436.76. The next trade we took a loss. No problem. Out of $436.76. Now, let me stop right here. Now, a lot of you would have saw this and said, hey, I'm up over 100% on my whole balance. Let me up the stop loss. Let me up my lot size and just start losing money. But no, we're still practicing risk management, ladies and gentlemen. We're still practicing risk management. Drop the RMs in the chat. I need to see it again. Are you awake? Are you there? I need to see it. RM to the rescue. Hey, I had $436. I'm only losing $4.36. I'm not losing sleep. We're down to 432. Whew, no problem. Look, next trade, very next trade. We lost 436 on that one. On the very next trade, we made $7.50. We won what we just lost, no problem. 439.90. Next trade, we won $5.50. We're up to 445.40. Next trade, we won $4 up to 449.40. Next trade, look, the lot size, because look, our balance here, again, we're using true risk management. What is 1% of $449.40? $4.49. All right. That is what 1% is divided by 27. All right. Look, 0.016. Now, some people would have rounded 0.016 up to 0.02. This is where that happened. No problem. 600. Remember, if you add a 0, 60 pips is 600 pips. All right. 600 times 0.02. We made $12. That's where you got that number. So $461.40. This is what we're up to. We took a loss. No problem. We only lost $4.61. I'm not losing no sleep. I'm not taking pills. I'm not about to slit my wrist. I'm not calling G. I'm not trying to inbox G. I'm not trying to inbox Chelsea. 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 And I'm not repeating myself for my own good. Because this is what happens. You lose your mind. You don't know what's going on. All right. Risk management. Okay, no problem. I'm down to 456.79. I lose another one. No problem. I only lost $4.50, 56 cents. No problem. On this one, I lost again. I took 3 losses back to back to back to back to back. And y'all losing y'all mind. After 3 losses, y'all losing y'all mind. But guess what? You can lose you can't lose any more than 5% on most funded accounts. All right. So look what we have. We're down 3%, but we're only down 3%. We've already over doubled our account. Wait a minute. Let me blow your mind. This was all in 1 week. How many people are doubling their accounts in a week? We hadn't even finished the week out. But let's continue. 447. Look, in these 3 trades right here, let me add them up. How much we lost. 461. All right, plus 456 plus 452. We lost 13.69. In the very next trade, we won $7.20. Let me subtract that. All right, and our balance is 554. Lost another 1%. We lost $4.51. So add $4.51, 54 rather. This is how much we have lost, $11.03 out of $454. I am not losing my mind, all right? This is how much we have lost out of all of those losses, $450.37. But guess what, ladies and gentlemen? The week ain't over. We still trading. Mama G then called some trades on her own. And look, she called 8 trades. She only won 3, all right? She won 42% win ratio on that particular week. Now, by her standards, I know G, all right? I want everybody to put a G in there. Put a goat in there. I need you to drop the goat emoji. Find it, drop the goat, all right? Drop it, drop the goat. Are they dropping it, G? Talk to me.
Yes, sir.
Man, look, this is what happens when you only win 3 out of 8. When your win-percent ratio is 42%. Look, first trade. Now remember, our balance here, $450.37. We lost one. I lost $4.50. All right, let's continue. $4.50. All right. All right, so we add $4.50. I'm just adding how much we lost. We down. Look, here's another one. We're down. $4.41. All right. Here's another one. $4.45. I missed that one. Here's another one. $4.37. Here's another one. $4.32. This is how much we've lost out of this $450.37. We are down now to $428.32. Am I losing any sleep by losing $33 from $443? I'm not losing any sleep. $428. I'm not losing any sleep. But guess what? Mama G hit a few of them. That's all it takes. All right. Look, she called one trade, Euro NZD, lot size 0.01, went 150 pips. See, this is the trade she be talking about. While everybody else getting 15 pips, 20 pips, her trade just went 150 pips. All right. So clear. 150 pips means 1,500 points times 0.01, the lot size. We made 15 bucks. We're up to 443. All right. The next one, lot size 0.02. All right. Look what the TP, 181. Let's do the math. 181 pips is 1810, 1,810 points times 0.02. We made $36.20. All right. We are up to $479.52. All right. She only won 3, but guess what? Here go the third one. All right. Look at it. Stop loss is 15 pips. Stop loss is 20 pips. Stop loss. See, when your stop loss is small, that's what she can do as a GOAT. And with the TP as 128, boom, 128 pips equals 1,280 points times 0.03 lot size, ladies and gentlemen. She made $38.40. Now, look at our ending balance for the week. $517.92. All right. We started the week with $200. We ended the week with $517.92. Ladies and gentlemen, if you subtract 517.92 minus 200, we made $317.92. Now, that, ladies and gentlemen, is 158% profit. All right? Because if you take that number and divide it by 200, all right, and you take your decimal place and move it to the right twice, this is how we got 158, really 158.9. I'm really shorting her. She really made almost 159%. Look at that. 159%, and you only were trying to get 10%. Ladies and gentlemen of the jury, I'm just going to close this out right here. All right. I have some charts because, again, risk management. All right. Look at these charts. A lot of you looking at zones. All right. I'm on the 4-hour chart. All right. And look at this. I already know that this is my current range. Look at this. If this is my current, if price is in over here, let's just say I cut all this off. All right. I cut all of this off. No particular indicators, nothing on my chart, naked price action. I'm looking at the current range that we are in. All right. This range broke this current top. So this is my current range I'm in. If I just took my Fibonacci, all right, let me move this down. All right. I'm just taking my little Fibonacci from this low to this current high. All right. And this is our current range. All right. Now, for those of you who are in the academy, you know that 50% above is premium, 50% is lower discount. Most times what we know is when the item is on discount, you know, my lovely fiance, she just came back from shopping. I guarantee you she didn't buy something that was a high price. It wasn't premium price. She's looking for the discounts, ladies and gentlemen. So what do you do when the price is discounted? You buy it. But if you're selling something at a high price, let's just say you had hats for sale. If you are a seller of hats and some people are selling hats for $2 and you had hats for $10, would you rather people buy the $2 hats or the $10 hats? The $10 hats. So when price is in a premium, you sell. That's the rule. You sell. You take sales here, you take buys here. So, okay, if price begins showing me breaks of structure, you know, at some point, there's already minor breaks of structure already. So I'm looking, okay, let me sell here. Okay, let's just say I took a sale here. Boom, I sold here. All right, let's just, you know, say we do this. All right, you know, I know y'all want to be technical. Shorts. Let's just say we shorted here. Let's just say the stop loss was here. And let's just say we do this. All right, let's keep going. All right, price never whip me out. All right, never whip me out. Never whip me out. Never whip me out. Never whip me out. Some people sold here. All right, let me take this. Some people sold here because we were still in premium. Some people sold here and got knocked out. Some people sold here and got knocked out. But guess what? I'm using risk management. I made a win here. That's 1%. I made a loss here. But look what happened. Price came here. I took another sale because there was another break of structure. All right, minor break of structure. And guess what? We are still in premium on a higher time frame. So I'm practicing risk management. Out of 4 trades, I lost 2, won 2, but look at my risk to reward. All right. Let's just say, let me cut this off now and let's just look at the risk to reward. Let's just say we dropped into those trades. Look at what the risk to reward would have been. Let's just say here, I would have done this. Let's just say we had the nuts to come here. Let's just say we'd have come to here and just say, we just want to see what we would have made if we'd have just come to and broke this low. All right. Okay. We would have made 1 to 6.58. We would have lost here. We'd have taken another one right here. It broke here. Let's just say we'd have taken, look for fair value gaps. We would look for order blocks. Let's just say, I'm just placing the stop loss. Let's just say we'd have had this. All right. This is a 30 pip stop loss. Come straight to the bottom here. I'd have made 13.21. That's FTMO right there by itself. Again, practicing risk management. 1 to 6.58. Here we won 1 to 13.21. 2 losses, no problem. So in all, 6.58. All right, let me do that on our calculator, and so we can see what we made. All right, 6.58 plus 13.21. All right, wait. Plus 13.21 equals 19.79. We lost these 2 trades, so let me minus 2. Man, 1 to 17.79. Ladies and gentlemen, this is what risk management looks like. This is what risk management looks like, okay? I need you guys to understand that we practice what we preach. We practice what we teach. And on that note, ForexNChill, I need you to drop it again in the chat. ForexNChill, because this is where we teach people to be the signal, all right? I appreciate you guys for hearing me out. And even for Steve S., who just came into the chat and we're about to get off, we appreciate you for coming on too. And it's back to you, G.
All right. So since he brought up trades, and y'all know I'm a big time swing trader. How many of you caught that 500 pip move on Euro ALD? How many of you caught that US oil sell the last 2 weeks? How many been selling gold? How many been selling Euro USD? I told y'all those trades were going to happen. Anybody keep their eyes on them and take them? Because that's thousands of pips right there. Neil caught the gold sell. So let's just look at the charts real quick. We'll be off of here in like 2 minutes. We'll be off of here in like 2 minutes. This is why, guys, I teach y'all on Sunday nights. When I do the weekly outlook, we only look at the higher time frames. So I can get y'all in these like 500 pip sales on the US oil. I told you guys to sell it from the daily order block down to here. Hope everybody took that. It kept rejecting off breaker blocks. All these entries were on breaker blocks. If you guys haven't been watching my Monday night sessions, I've been really reiterating these breaker block entries. These are beautiful entries. If you guys don't know how to trade the breaker blocks, definitely start watching the training and plug into those. All right. And gold. I've been calling this weekly move for a long time. All right. It's just following liquidity. I guess did I accidentally take some stuff off my chart earlier? I guess I did. So let's go here. We still got a draw on liquidity down here. Sell side liquidity because we have the equal lows and a weekly order block with imbalance. Why is this a high probability order block? Because it broke structure, left imbalance, and took out an opposing order block. So that's a really big draw on liquidity. So guys, we like to catch the 500,000 pip moves over here. You don't have to hold the whole trade. You can get multiple entries, but that's how we do it at ForexNChill. We thank you guys for being here. Crisscross and the other EAs should be out in the next few days. We thank you for hanging out with us tonight. And ForexNChill for life. Have a great night, guys.